Hello and welcome to TOOP TV. It's been a very special week here. Not only have we celebrated Mother's Day, but also the company's 26th birthday as well. So as a present for all of you, we want you to put your feet up, relax and take a look at one of SA's finest properties in Oakbank. It's just gorgeous. In TOOP's Tips, some important information for homeowners and landlords regarding smoke alarms. So stay tuned for that. And of course we're live and interactive, so send in your real estate questions and we'll answer them at the end of the show. Sorry about the slight delay, we've just had the power out. But on today's show, we're going to talk about the 7-year real estate cycle with National Salesperson of the Year, Tim Heaviside. But for now, our inside story on the suburbs set to boom.
Making money from buying real estate is quite often about being able to predict which suburbs are set to boom. So for those of you who don't have a crystal ball, it's important to be able to spot indicators of future growth. Commonly referred to as the ugly duckling suburbs, these regions have character and personality, but go through a slump before we see a boom period. These areas are likely to experience increased spending in infrastructure, an influx of restaurants and visitors, and growth in the number of young and trendy people choosing to live there. Glenelg and Nord experienced this cycle before house prices increased, and the Australian Property Investor magazine has suggested the established cultural hubs of Port Adelaide and Port Noarlunga could be next. Port Noarlunga has already begun its ascent, chalking up a 10% growth in house prices last year.
It's no coincidence this occurred at the same time work began on the Seaford train line extension and with the announcement of the upcoming duplication of the Southern Expressway.
So when looking for property to buy, it's important to consider the suburbs which may be at the bottom of people's location wish lists now, as they may contain hidden treasure in the future.
We'll keep an eye on those areas in coming months. Well, today on the show I have with me Christy Rigg and Tim Rogers from Wealth by Design. Welcome, guys.
Hi,
Thanks, Kerry. It's good to be here.
Good. So just some questions for you in a very interesting industry. When you both meet someone for the first time, what are the sorts of things you talk through with them as financial planners?
Yeah, thanks, Kerry. We cover off obviously a lot of areas with people, and everyone's situation is quite different. But one thing that generally most people have is property, because everybody tends to own their own home or aspire to own their own home. So the ownership of that property is probably one of the first things we look at for people. Does the husband own it? Does the wife own it if they're in a couple? Is it in a family trust? Those types of things. And what's the purpose of it? Is it their residence, their primary residence, their home? Is it an investment property, residential, or is it commercial investment property? So the different purpose of the asset, the underlying asset, will determine how it should be owned and the structure of that ownership.
Right. And what about the actual loan structure itself? Because you've got to look at things like fees and whether it's interest. What's some of the things around that you help clients with? Yeah,
that's certainly a big area and extremely competitive at the moment. Certainly the major banks are having a good go at each other, and the ultimate winner of that will be the consumer, which is good. But it's important to regularly review those sorts of issues, your loan structure, your banking structures. And the things we'd look at for clients is their annual fee. Are they paying a competitive fee, an all-inclusive fee, or are they paying individual fees? The loan itself, how is that structured? Is it a principal and interest loan, so are they making regular principal repayments which you would do on your home? And are they doing that weekly or fortnightly rather than monthly, which can save years off the term of the loan and interest? And of course interest rate, that's the topical thing, and a lot of people will generally know what their interest rate is. But is it fixed? Is it variable? Do they have any exit penalties to get out of their current structure? Is really important. The other thing that we look at is the suitability of the loan that they've got compared to the use of the asset. So if it's an investment property, for example, are they paying principal off that investment property rather than using those funds to save elsewhere? So we look at things such as an interest-only loan or a line of credit, for example, which has become very popular with the bank offerings in recent years.
And of course one of the other things that's really important is cash flow, and I think Christy, you're going to talk to us a little bit about rental crediting and things like that.
Look, cash flow is absolutely fundamental, and it's one of the first things that we would discuss with a client and look at their situation. In terms of getting into a property, or whether it be a brand new property for them to live in or whether it be a rental property, we have to have a look at their cash flow and understand how it's running and whether or not we can help them find some efficiencies in that. We look at salary crediting, so where their salary is going, how often they're paid, how they're paid. Is it sitting at offset? So can we salary credit directly into their home loan or an offset account? Can the rental that they might get from a property be credited straight into an offset account? We also look at things like how their expenses are paid. Are they using a credit card? Do they pay it off in the correct time frame? Things like that. And quite often, if you find the efficiencies in the cash flow, you can actually free up some cash flow, and that allows them to be in a better position to go ahead with different types of investments and things like that. So yes, it's absolutely fundamental.
And what about property management for rental properties? What's the structure and costs involved in that?
It's very important, and look, a lot of the costs involved are sometimes misrepresented in investors' eyes. Often you'll see people try and do it themselves, and it creates a false economy. They think they're saving money, but if they actually valued the time that they put into it and some of the errors that are commonly made, they'd realise that there's good value in using an expert. Our business model is to engage experts in the various areas and on behalf of our clients, and property management is certainly one of those. And
right.
We would always seek to bring a specialist in that field into the relationship to enable the client to get the best out of the property and to avoid any of the legal pitfalls that they could possibly fall into during that course of owning that property.
And what about insurance? I guess that's very important as well, isn't it?
Very important, and we would look at all aspects of a client's insurance. That can include both general insurance and your own self-insurance, so your personal insurances. In the case of general insurance, as Tim said, like with a property manager, we would also bring in a specialist in that area. We would consider whether or not they need building and contents, whether they have strata insurance, the need for landlord insurance, and all of the elements that are attached under those types of covers. So how are they covered, what are they going to get paid, and how that actual policy works. From there, we would also look at whether or not they've got personal insurances and what they need. So that can cover things like life cover and total and permanent disability that would cover off the cost of their debt if something was to happen to them. We would definitely look at income protection. That's absolutely vital because if you've got no income coming in, it can also affect the ability to keep running your investments or your investment property or other things, or just generally pay your bills. And finally, trauma insurance. And trauma insurance covers more short-term things like a cancer or stroke or things that you would normally go back to work, but quite often place a lot of financial stress on a person if they don't have it. And just backing off of that, we also make sure that clients have got estate planning.
Great.
And that would include a will, a power of attorney, a power of guardianship. And again, we would engage with specialists, whether it's a lawyer that the client already uses, or we can find them one if they don't already have a lawyer that they use.
Well, that sounds a great service. Got lots of information there. Really appreciate you sharing that with our viewers today. But for now, let's go behind the blinds.